Welcome back to the Neuro Finance Masterclass. We are crossing a massive threshold today. This is day 73 of the 365 Days to Financial Freedom series, and our focus is an absolute game changer. It's all about ultimate capital protection. Look, we've gone over how to find great assets, right? We've talked about reading market cycles, but what actually happens when the market suddenly turns against you? In this explainer, we're diving into the exact tool that separates the true professionals from, well, everybody else, the stop loss.
Quote, "This is how portfolios die." I mean, it's brutal, but it's the absolute truth. We see this literally all the time. An amateur buys in, and bam, the asset drops 20%, then it's 50%, then 80%. And what do? They just sit there, completely paralyzed by hope. They're staring at the screen, bleeding capital, telling themselves, oh, I'll just wait for it to come back. It has to come back, right? No way. That agonizing pain point is exactly what we're eliminating today, because you absolutely cannot build a financial empire if you let a single bad idea burn your whole portfolio to the ground.
Which brings us to our first major concept, the amateur's hope trap. Let's get one thing straight right off the bat. Even the absolute best architect, the most seasoned pro in the market, can be wrong. Being wrong is just part of the game. But the amateur, they handle it with a hoping mindset. They're passive, they hold on to losing positions, just praying for a magical recovery that might never actually happen.
Exactly. The architect, on the other hand, operates with a protective mindset. They act decisively, they aren't crossing their fingers, they're executing a plan. They ruthlessly cut the dead weight to protect the core engine of their wealth. Basically, the amateur hopes while the architect protects.
So how do we cross over from hoping to protecting? Well, we need a mechanical emergency exit. We need a solution that completely strips human emotion and panic right out of the equation during a crisis. Because let's be real, when those red candles start printing on the chart, your brain panics. So, that emergency exit, that's the stop loss. A stop loss is an automated order you place with your broker. It essentially says, hey, if the price drops to this exact level, sell my position immediately, period. No second guessing. And here's the absolutely crucial part. You have to locate and set this exit before you enter the battle. You set it when your mind is calm, when your neurofitness is at its peak, well before the fog of war sets in. Now, you might be wondering where exactly to place that exit. Let's get into the hard math of survival with mastering the 2% rule. 2%. I want you to burn this number into your mind. This is the 2% rule. For the architect, this is an absolute non-negotiable law of survival. The rule is incredibly simple. On any single trade, you should never, ever risk losing more than 2% of your total capital. It doesn't matter how sure you are about the asset, doesn't matter what you heard on the news this morning, your emergency exit must be placed so that if disaster strikes, your total portfolio only takes a tiny 2% hit. Let's actually walk through the math to prove how powerful this is. Say your total capital is $10,000. Applying that 2% risk constraint means your maximum allowable loss on a single bad idea is just $200. Think about the freedom in that. Capping your risk at $200 means you could literally suffer a string of 10 consecutive losses. 10 bad trades in a row, and you'd only be down $2,000. Your empire is still standing. You haven't been wiped out. You live to fight another day, completely calm and collected. Taking that small loss is actually a massive psychological win. It's a small loss, big victory. Think about it like this. A small loss is not a failure. It's just a business expense. Just like a shop owner happily pays rent and electricity every single month to keep the doors open, a smart trader pays small stop losses to stay in the market. It's literally just the cost of doing business.
Right. And by cutting those losses early, you keep your capital, your dry powder that we talked about back on day 42, safe. It's ready to deploy for the next golden cross setup we covered on day 60. You are the one in control. Embracing these small business expenses prevents a tiny, totally manageable mistake from snowballing into a catastrophic, life-altering disaster.
Which brings us to the core ethos of our masterclass today, the architect's discipline. All right, here is your immediate cognitive task for today. Step 1, audit your current positions. Take a hard look at everything you hold right now. Step 2, create a plan B for every single one. What happens if the trend reverses? And step 3, the most crucial one, set your emergency exit. Actually go put those automated orders into the system. A true architect never walks into a building without knowing exactly where the fire exits are. You shouldn't enter a trade without yours. So we're going to leave you with this one piercing question. If the market crashed 30% tonight while you were sleeping, would you be wiped out?
If your answer is yes, you've got work to do right now.
Go set your stop losses, protect your capital, protect your peace, and most importantly, stay in the game. We'll see you tomorrow for day 74.